Bitcoin's down, gold is down, property's down, all three at the same time. Now, most people hear that and reach for the panic button. Well, the new rich hear that and reach for their shopping list. In today's episode, let me show you why. Three assets: Bitcoin, gold, and property. 10 minutes and where the smart money is actually moving this week. And this week is a rare one, mate. Let me tell you, because normally at least one of these is holding the line. Today, they all got repriced together. So let's get into this and understand why this is all happening and what exactly started it all. So Bitcoin is sitting around 60,000 US dollars as I speak. And that is a area that it's been steering at for quite a while. We've been pushing up to 65, going down to 58, but we've kind of been bouncing around there. Now, to put this into perspective, it's down about 44% from where it was this time last year, and it's roughly 53% below its all-time high of about 128,000 US dollars. Now, that was back in October last year. So we are officially now calling, everyone's calling this crypto winter is here again. We are in that area. Now, money is flowing out of the Bitcoin ETFs, and every man and their dog are chasing AI stocks instead. There's an analyst out there warning that if we break 60,000 US dollars clearly, 40,000 is on the table. And that is the fear. That is real. That's what's out there. And I often say you need to not listen to that fear, because when there's fear, that is when we should be buying. So why aren't you panicking? Well, I'm not panicking. Troy's not panicking because I've seen this movie before. I went all in on this asset early and I sat through full cycles. I've sat through all the crashes. I've sat through Bitcoin's dead and never going to recover headlines. Mate, I've sat through everything. I've sat through the mates at the barbecue giving me the pity look, telling me that, it's all over, time to pack it all up. Here is the pattern that the new rich never forget. Bitcoin does most of its buying opportunity work when the headlines are the ugliest. And when are they the ugliest? Well, right now. There's even a seasonal quirk traders are watching historically, a red June, and that's tended to be followed by a green July. Now, is that a guarantee? Absolutely not. Nothing here is a guarantee. In a winter, there is no guarantees, but conviction gets tested in winters like this. One, it doesn't get built into the bull run. Now, this is not financial advice. It is a mindset. Winter is when the new rich accumulate while everyone else is capitulating, and that is what, if anything, you get out of this week's episode, I want you to really take in, okay? Now, here's what makes this week genuinely unusual. Gold, the safe haven, the panic asset, the thing that's supposed to go up when everything else goes down, well, gold is also moving down as well. It's back around that 4,000 US dollar an ounce mark. Now, that's off about 28% from its January record, near 5,500 US dollars, and it's had its fourth losing month in a row, and it's sitting near an 8-month low. This doesn't make sense. Fear is everywhere. So why is fear asset dropping? Why is this going on? It's a great question, and this is the key to the whole episode. It's the interest rate story. The US economy come in strong jobs data. That is happening. That's hot. Inflation's still stubborn above target, and the market is now betting the Fed's next move is a rate hike, not a rate cut. And when interest rates go up, gold, which pays usually nothing to hold, it looks less attractive next to cash and bonds that actually pay a yield. Add a stronger US dollar, add some easing tensions in the whole Middle East, Iran saga, and gold gets sold off. So it's a paper market, short-term thing. That is what I believe that is correct, because underneath it, look who's still buying. China's central bank has now bought gold 18 months straight, and JP Morgan hasn't blinked at all. They're still calling for a $6,000 an ounce gold by the end of this year. So the price is falling while the biggest, most patient buyers on earth keep stacking. What does this mean, guys? Remember that contrast. Price and value are not the same thing, which brings us home, literally home, to Aussie property, and it's the same villain in the story, interest rates. The RBA's been busy this year. We've had 3 hikes in 2026. I think it was February, March, I think it was May as well, taking the cash rate to 4.35%, which basically unwound every cut that they gave to us last year. They hit pause in June, but the damage to sentiment is already done. The National Capital City median house price, it slipped about 1% last quarter to just over, I think it's around 1.27 million. Auction clearance rates, well, they dropped to 47%, the weakest since April 2020, the early pandemic days, you may remember. So it's a buyer's market that's just getting softer. On the surface, yes, but here is the thing, right? You've got to read into it a little bit more. You've got to look under the price, because at the same time, prices, they're softening. Rents are up nearly 6% over the year. The national vacancy rates are down to 1.5%, near record lows. And we've still got chronic undersupply and strong migration. So the fundamentals that drive long-term property, that value, it hasn't gone anywhere, and that hasn't changed at all. What's changed is short-term borrowing power and confidence, and we've seen all this before. The banks are already tipping rate cuts in 2027, which is when the smart money reckons this cycle will turn. So the fear is loud, but the foundation is solid, and that is the whole game. So I want to leave you with the new rich signal of the week. Here's your signal of the week, the one idea that ties Bitcoin, gold, and property together. Every one of these fell down in price for the same reason. Higher for longer interest rates and sticky inflation are repricing every asset on the planet at once. This isn't 3 separate crashes, it's one macro tide going out. And when the tide goes out, you find out who was swimming with conviction and who was swimming on hype. The average investor sees 3 red charts and freezes. The new rich and the people listening to this, I want you to see one macro story and they ask a different question. Which of these assets has fundamentals that outlast a rate cycle? Because rate cycles end, Bitcoin scarcity never ever ends and will never ever change. Gold's 4,000-year track record never ever changes. Australia's housing undersupply never ever changes. Prices are on sale precisely because everyone's scared of a thing that is, by definition, completely and utterly temporary. So your one action this week, in my opinion, don't buy anything, don't sell anything, do this. Write down the price you'd love to own each of these 3 things at. A number for Bitcoin, a number for gold, a number maybe for a suburb, for a property you want, because the people who win in corrections are the ones who decided their price before the fear hit, not during it. Have your shopping list ready. Let us know any questions you have. The comment of the week goes to the legend who wrote, "You only ever say buy. You'd tell us to buy in a house fire." Well, let me tell you something, mate. If the house was structurally sound and 40% off, that's right, 40% off, which is what Bitcoin is, you might just buy. Love you all. Thanks for watching. Keep them coming. If this made sense, make a bit more. I'd love to hear from you. Hit subscribe. We'll see you next week. Bye for now.